What's going on, guys, and welcome to today's YouTube video. In today's video we are going to discuss the most important topic when it comes to trading. This is the topic that still so many people don't quite understand, and especially they don't understand the importance of it. We are going to discuss risk management. This part of trading is so extremely important, and even though a lot of people deep down know how important it is, they still don't know why it is so important and why they should always stick to it. We are going to discuss compound interest. We are going to discuss my experience with bad risk management. We are going to discuss risk to reward ratio. And we are going to discuss the psychology part behind risk management. First of all, let me tell you a little story about how I found out how important risk management was. Because when I started with investing into crypto, it was full bull market vibes. Everything went up in a straight line. It was crazy, guys. So I started with around, maybe it was like $500. Friend told me about it. I was like, okay, let me put a little bit of money into it and I'll see what happens. Within 3 days, my money honestly went 3x. So what did I do? I was still living in my parents' house. I saved up quite some money, put everything into crypto. Went crazy, went like 5x within a couple of months, was full bull market vibes, and I found out about leverage trading. So I was like, okay, these traders are giving out signals. Let me start to follow some of those signals. And I found a group that a friend of mine told me about, and I put some money into a leverage trading account. I followed the first signal without any risk management. I went all in on that signal, got liquidated, right? Didn't know about margin, didn't know about position size, didn't know about a stop loss, didn't know about take profit. I didn't know everything. The trader's signal went wrong, which obviously happens. It happens to all of us. It happens a lot of the times. There are so many traders that only have a 40% win ratio, but are still highly profitable, in which I will come down to that when we have a talk about risk reward ratio. And I lost all of it. Started to put some money into an account again. Everything went up. I started to understand it a little bit, and then I'm talking a little bit, okay? But everything went up, so I was just constantly longing. I was still not using a stop loss. I was that stupid that I didn't use a stop loss. But because everything went up, and as soon as it came down a little, I was just adding towards my position, I just made crazy amounts of money. I turned, honestly, my futures account, I turned $3,000 into $15,000 within a week. I was thinking, okay, within a month or so, I'm going to be a millionaire. But no, what happened was, I was having a football game. I was in like 4 long positions, no stop loss at all. I went to play the football game, and Bitcoin, instead of going up like it did every single day back then, it tanked 10%. What happened was, everything that I built, the whole $15,000 was gone. My whole account was liquidated. I only had my spot positions left, which was still the biggest part of my portfolio, luckily for me. So that for me was the moment, okay, there's a lot of money that can be made with crypto, but there's also a lot of money that can be lost. But if I'm going to do this the right way, I can make a lot of money with trading crypto. So then I started researching about risk management, about trading techniques and stuff like that. And that is when I really started to become a proper trader. Still took me a long time, but that to me was the moment to say, okay, now I'm going to take this seriously. And everything starting from that moment, so far, so good. Something that a lot of people don't understand is the power of compound interest. And compound interest reflects back to patience and to discipline. If you start with $100 on day one, and you only get a return on investment of 1% a day. In the meantime, a coffee machine is going to wash itself, so I'm sorry for the noise, but I'm just going to continue. You're going to get 1% return a day. First day, you only make $1, but the next day, you make $1.01. It doesn't seem like much, right? But after 1 year of compound interest, of making profit over that profit, with 1% a day and a starting budget of $100, you will have a 37x on your money. It seems impossible, right? But this is the power of compound interest. And this reflects back to being patient, having the discipline to not wanting to make money quickly, and realizing that it is not a sprint, but it's a marathon, right? So this should tell you guys, even if you start with $100, if you start with $1,000, but imagine if you have a budget of $5,000 and your money goes 37x within a year by making 1% a day. That is honestly crazy, right? And that is something that people should realize, how important risk management is and how important it is to use it in a proper way. So then we move over to the next topic, right? Now we understand how powerful compound interest is and how that should tell you to just be patient and to focus on that. Even if it's 0.5% a day, you are making crazy amounts of money, right? Then we are going to talk about risk to reward ratio. For this topic, you can use the long position tool or the short position. And I always tell you, use a maximum risk of about 2, maybe 2.5% risk on each trade if you're really certain about the trade. But usually I risk about 1 to 1.5% a trade, and that to me equals 1R. So let's say you risk 1% on your trade if you hit stop loss, right? And you're going to long it from here, stop loss, for example, below this low over here. You should always target at least, and then I'm talking at least, a risk to reward ratio of 2RR, which means that if you're risking 1% of your account, if that equals 1R for you, then your target should be at least 2R. And you can see it here, risk reward should at least be 2R. And why is that so important? Because that means that if you risk 1% of your account, let's say that equals $10 is 1% of your account, then if your take profit gets hit, your reward will be $20. Let's say your RR is 3, which I usually try to target. And so you're risking $10, and if you win, you're gaining $30 on your account, right? So your RR is 3. Instead of 2, we're going to make it 3. That means that you only have to be right once every 3 trades. Now you're probably thinking, but how can I be profitable if my win ratio is only 33%? Let's say you are wrong twice out of those 3 trades. That means that you lost $20. But one of those 3 trades with an RR of 3 is completed. Then you gain $30, right? So that means that $30 minus 20 is still $10 profit, is still a 1% gain on your account. And that should show you how important risk to reward ratio is in confluence with compound interest, how powerful that can be. You only have to be right 33% of the time if you stick to an RR of 3, right? You only have to be right 50% of the time if you stick to an RR of 2, because if you win once, you gain $20. If you lose once, you lose only $10. Still a $10 profit. This should show you guys how important risk management is, and that patience and discipline is so important. You only have to take 3 to 4 trades a week, right? If you have the right trades with the right RR, you will gain that 6, 5, maybe 7% on that account a week, which is crazy because I just showed you guys how powerful that compound interest will be. Maybe you don't risk 1%, but maybe you feel comfortable enough with, for example, your own trades or with following the right signals that you will be comfortable with risking 2%. Well, imagine if you risk 2% and you are still as profitable as you would be with 1%, right? This would all double, which is crazy, but it is true. But if you cannot double an account of $100, there is no way you're going to double an account of $1,000, right? There is no difference. It all comes down to the exact same part, which is risk management, which is the amount, the percentage you risk of your account on each trade, the RR you aim for each trade, and then in confluence with your win ratio, you will get a certain return on investment every single day, every single week, and every single month. There are going to be good days, there are going to be bad days, there are going to be good weeks, there are going to be bad weeks. But important is that you never ever lose sight of your risk management. If you have 1 or 2 bad trades, there's no way that the third trade you should higher your risk or you should lower your risk, right? There is just one system for risk management that you should figure out for yourself, and you always need to stick to that system. Don't change it when things are going south. Don't change it when things are going your way. Just stick to the same system every single day, and you will become profitable in the long run. Even when you're following signals, it is very important that you have a certain risk management, that you have a certain risk management system that you are going to stick to every single signal that you follow. Without a plan, you won't become profitable in this industry. That is something very, very important, and I cannot express enough how important risk management is, guys. Honestly, the story that I just told you guys should tell you enough. There is no way that you are going to 5x your account within a week without losing it at some point. There is no way, right? Without the right risk management. Obviously, you can start a challenge account and double it in a week, but it involves a lot of risk, right? But in the long run, with your main portfolio, if you have the right strategy, if you have the right risk management, if you have the right plan, you will become profitable. All it needs is a lot of discipline, because I know the feeling of losing 2 trades in a row, 3 trades in a row, and wanting to higher your risk on the next trade in order to make it all back. That is where a lot of people make the mistake of indeed hiring their risk and losing even more. And then you come into that negative spiral, and that is where you start losing a lot of your portfolio instead of taking a step back, sticking to your system, and going for that next trade, right? I hope this video has helped you guys understand risk management, has helped you guys understand compound interest and the importance and power of it. If you guys do have any questions after watching this video, please let me know in the chat, and I will be answering all of your questions for you. One thing that a lot of people are always asking me is, what leverage do you use? Is leverage important? I will tell you one thing, leverage is completely irrelevant. Let's say you have a leverage of 10x with $100. It turns into $1,000. But let's say you have a leverage of 100x with $10, then it also turns into $1,000, right? So in the end, it is your position size in confluence with the percentage of how far your stop loss is away from your entry point, which will calculate your risk. There are so many sites on the internet where you can easily calculate your risk by just filling in your trade setup, and then it will calculate your position size, etc., right? So leverage is irrelevant. All that matters is your position size in confluence with your stop loss, and that will determine how many percentage of your portfolio you will lose once your stop loss gets hit. And then it is important to take the right take profit targets and target at 2 or 3R on the trade. Thank you guys for watching. If you guys do have any questions, like I said, please let me know in the chat down below, or join our free Discord, and you can ask me all of the questions that you want over there. Thank you guys for watching. Enjoy Easter. I will see you guys on Monday again. Ciao, ciao.